Hello students, welcome to Accounting Explained at AccountWise Academy. This is Latha Venkateshwaran. Today we are going to see chapter 4 of class 11 NCERT Accountancy syllabus. The chapter name is Recording of Transactions 2. If you want to look into the important questions and MCQs, you can always look into our shorts of our channel Accounting Explained. Today we are going to see Purchases Journal Book. Topics to be covered for today's video are Introduction, Purchases Journal Book, Purchases Return Journal Book, and we are going to see a problem on Purchases Journal and Purchases Return Journal Book. Introduction. We know that journal is the starting point for accountancy. Journal is very much needed for all businesses. So each and every transaction should be journalized. If it is a small business, then we can journalize each and every transaction. Only journal is enough. Consider it a medium-sized business or a very big business. In such case, only journal is not enough because there will be a lot of repetitive transactions taking place in that business. For example, we can say for repetitive transactions like cash and bank, purchases, sales, etc. In such cases, we will use special journals. Okay, special journals are specialized accounting records designed to efficiently and accurately record specific types of business transactions. So what are the specific types of business transactions here? The transactions which are very much repetitive in nature. Okay, these special journals are also called day books or subsidiary books. Other name for special journal is day books or subsidiary books. Advantages of special journals. Why do we have to have special journals separately? Efficiency, standard formats and reduced effort. So it's a big business and there will be a lot of cash and bank transactions. All the cash and bank transactions will come under cash book. So it is very easy, no? So it increases the efficiency. Next, accuracy. Specialized checks, error detection and clarity is achieved. We are maintaining separate cash book. So it will be very accurate because we are going to see in that cash book only cash and bank transactions. So there will be accuracy in it. Clarity. Categorization will be easy, insights can be done and financial reporting can also be done in a jiffy. Division of labor, task allocation, expertise and financial reporting. So cashier will look after cash book. Similarly, other journals will be looked after by accountant and petty cash book will be looked after by petty cashier. These are all specialized journals. Okay. Financial reporting. Source documents, analysis and decision making. It is all very easy with special journals. So source documents is available, analysis can be done with the source document and even decision making can be done very easily. Examples of special journal are cash book, petty cash book, purchase day book, sales day book, etc. In today's video, we are going to see about purchases day book. Purchases journal book. Recording credit purchases. All credit purchases of goods are recorded in the purchases journal while cash purchases are recorded in the cash book. Here goods means which are used for reselling or which are used for further processing to get the final product. Okay, that is what is goods are referred here. First, only credit purchases are recorded in the purchase journal. If it is a cash purchase, then it will go to the cash book. That you make clear. Only credit purchases will be recorded in the purchase journal and cash purchase of goods will be taken to the cash book. Other purchases. Purchases of office equipment, furniture and buildings. What are all these things? Office equipment, furniture, buildings. Are they used for reselling for the business? No, they are all, yes, assets for the business. So they are recorded in the journal proper. That is, they will be normally journalized if on credit. Okay. Or the cash book if for cash. If they have bought it for cash, then it will go to the cash book, or else it will be journalized. Source document. Invoices or bills received from suppliers are the source document for recording entries. So the invoices or bills you will receive from the suppliers of those goods, no? So those are the source documents for recording in the purchaser's journal book. Net amount. Entries are made with the net amount of the invoice excluding trade discounts and other details. Net amount is the final amount which we are going to pay, no, in the bill. Bill amount to be paid will be there in the bill. So only that amount should be taken to the purchaser's journal book, or not other trade discounts and other details will not be taken. Only the net amount which we are going to pay to the supplier will be taken in the purchaser's journal book. Posting. The monthly total of the purchaser's journal is posted to the debit of the purchaser's account in the ledger. Later, this purchaser's journal will be balanced, and that balance, monthly balance, will be taken to the debit side of the purchaser's account. This is your purchase account, that is your ledger account, purchaser's account. This will be taken to the debit side of the purchaser's account like and be written as sundries. To sundries, whatever the amount which we have got in the purchaser's journal will be taken here. Individual supplier accounts may be posted daily. So individual supplier accounts, because only the credit purchases we are taking into the purchase journal book, no. So individual supplier accounts will be posted daily to know the balance daily. Let us see the format of the purchaser's journal book. In the exam, you have to prepare purchaser's journal book. This format you have to follow for the exam. First, you have to write date of purchase, then invoice number. Here invoice number means supplier bill number. This is our source document. That is what we saw, right? Then name of the supplier. Suppose name of the supplier is Abhi Industries. Then that supplier name should be written here. He is our creditor. LF. LF is the ledger folio number of our purchases account to which we are going to transfer later. And amount of purchase. Amount should be net amount which we are going to take after considering trade discounts and other details. Okay. The final amount which we are going to pay to the supplier. Similar to purchases journal book, we are going to maintain a book called Purchases Return Journal Book. This Purchases Return Journal Book is used for recording returns. Purchases return of goods are recorded in the Purchase Return Journal. To track goods returned to the suppliers. When we return the purchased goods, it goes back to the suppliers. No, we might return back to the suppliers due to quality issue of the goods or defect in the goods or for any other reasons. Now let us see the format of the Purchases Return Journal Book. This is the format, and this format you have to maintain for the exam also. Heading is Purchases Return Journal Book. First, the date of return, debit note number. We have to raise a debit note for returning the purchases. Okay, so that debit note number should be written here. Name of the supplier to whom we are going to return the goods. Suppose in the previous example, what did we see? We saw that Abhi Industries is a supplier. If you are going to return to Abhi Industries, then Abhi Industries should be written here. Ledger folio number. This will be transferred to the ledger account of purchases return account. The balance of purchases return journal book will be transferred to purchases return account. The page number of that will be written here. Ledger folio, under ledger folio number, and amount, net amount of the return will be written in the amount column. What is a debit note? Okay, a debit note is prepared for each return with the original copy sent to the supplier. Each return you are going to make, or every return you are going to make to the supplier, you have to raise a debit note. In turn, the supplier will give you a credit note. In this case, you are the purchaser. You will be giving debit note to the supplier, whereas supplier will be giving you the credit note. Okay, this you have to remember. Purchaser will be giving the debit note, supplier will be giving the credit note. Source document. The debit note serves as a source document for recording entries in the purchaser's return journal. In the purchaser's return journal, the source document is the debit note. Whereas in the purchaser's journal, what was the source document? The bill raised by the supplier. The debit note contains details of the returned goods. What is the quantity of the returned goods? All the details will be given. The party involved. In our example, the party was Abhi Industries. Reason for the return, whether it is defective goods or quality of the goods, whatever may be the case for the return, that reason should be given. Let's see in detail what is a debit note. Debit notes are issued to record debits against a party for reasons other than credit sales, such as defective goods. So, if you are going to return defective goods, in that case, we are going to raise a debit note, or additional amounts owed. Or if you are going to recover additional amount from the customer, in that case also, debit note will be issued, but not for credit sales. That is not done. We cannot raise a debit note for credit sales. Debit notes are issued when defective goods are returned to a supplier, purchase return. An additional sum is recoverable from a customer. A customer has to pay you additional sum. In that case also, debit note will be raised. A debit note is a formal document that details a reason for the debit and the amount involved. What is the reason for the debit and the amount involved? Name of the firm issuing the note will be written here. Okay. And number, or what is the number of the debit note, address of the firm, date of issue will be written here. This is the format of debit note. Okay. And the heading debit note will be written here against supplier's name. In our example, it was Abhi Industries. Goods returned as per delivery, challan number, details of goods returned, rupees, how much, what is the value of the goods, signature of the manager with date. This is the format of the debit note. Let us solve a question on purchaser's journal book and purchaser's return journal book. The question is as follows. Enter the following transactions of Messrs. High Life Fashions in purchaser's and purchaser's return book and post them to the ledger accounts for the month of September 2014. Date, details. 2017, September 1. Purchase of following goods on credit from Messrs. Ratna Traders as per invoice number 714. 25 shirts at rupees 300 per unit. So 25 into 300 amount should be written. 20 pants at 700 per pant. So 20 pants into 700. The total amount should be written. Less 10% trade discount on this. Trade discount should be deducted and the net amount will be transferred to the purchaser journal book. Purchase of on September 8. Purchase of the following goods on credit from Messrs. Bombay Fashion House as per invoice number 327. So this is your source document in this case, and invoice number 714 is the source document. 10 fancy trousers at rupees 500 per trouser. 10 into 500 amount will be taken. 20 fancy hat at rupees 100 per hat. 20 into 100 amount will be taken. 2000 I guess. Yeah, 2000. Less 5% discount. Whatever is the amount on that, 5% trade discount will be deducted and the net amount will be taken to the purchaser's journal book. On September 10, Goods returned to Messrs. Ratna Traders as per debit note number 102, 3 shirts at 300 per unit. So this debit note number 102 is our source document for purchases return book, and 3 into 300 amount should be taken to the purchases return journal book. 1 pant at 700 per pant. So 1 into 700 should be taken to the purchase journal book. So total is how much? 900 plus 700, 1600 will be taken. Less trade discount, not 1600. Trade discount, the total amount should be deducted from that 10%, and the final amount, net amount, will be taken to the purchases return journal book. On September 15, purchase of following goods on credit from Messrs. Zolta Fashions, 10 jackets at 1000 per jacket, 10 into 1000 amount, and 5 plain shirts at 200 per shirt, 5 into 200 amount. Take the amount on that, reduce 15% trade discount. Net amount will be taken. After deducting 15%, the net amount will be taken to the purchases journal book. Purchase of following goods on credit from Messrs. Bride Palace as per invoice number 1076. So this is our source document. 10 fancy lehenga at 2000 per lehenga. So 10 into 2000 less trade discount. On that we have to deduct trade discount of 5%. So only the net amount will be taken to the purchases journal book. Goods returned to Messrs. Bombay Fashion House as per debit note number 103. 2 fancy trousers at 500 per trouser, 2 into 500. 4 fancy hat at 500 per hat, 4 into 100. Less 5% discount. Take the total amount, on that deduct 5% trade discount, and the net amount will be taken to the purchases return journal book. On September 28th, goods returned to Messrs. Bride Palace as per debit note number 105. So debit note number 105 is our source document. 1 fancy lehenga at 2000 per lehenga. So 2000 rupees is the net amount, gross amount. On that deduct 5% trade discount. Net amount will be transferred to the purchases return journal book. This is our question. This is our solution. Now we are opening 2 special journals. First, in the books of High Life Fashions, purchases journal book and purchases return journal book. See the first transaction, September 1, 2017, purchase of following goods on credit from Messrs. Ratna Traders as per invoice number 714. 25 shirts at rupees 300 per shirt, it is 7500. 20 pants at 700 per unit per pant, 14,000. 20 into 700 is 14,000. Total comes to 21,500. On that we are giving a trade discount of 10%. Less 10% trade discount is 2150. On deducting 21,500 from 2150, we get 19,350. Okay, this is our purchases journal book. So the format is date, invoice number, that is a source document, invoice number of the supplier, name of the supplier, LF amount. So date is September 1, 2070 we are writing here. And what is invoice number? 714. 714. Ratna Traders, amount to be taken is 19,350. The net amount to be paid to the Ratna Traders is 19,350. Next is purchase of following goods on credit from Messrs. Bombay Fashion House as per invoice number 327. So the source document is 327 on September 8th. Let us see what is the net amount. 10 fancy trousers at 500. 10 into 500 is 5,000. 20 fancy hat at rupees 100 per unit. 20 into 100 is 2,000. Total comes to 7,000. Less 5% discount. 5% of 7,000 is 350. So the net amount is 6,650. Messrs. Bombay Fashion House is the supplier. Name of supplier Messrs. Bombay Fashion House. and the net amount is 6,650, which we are taking to the purchasers journal book. Next is September 10, goods returned to Messrs. Ratna Traders as per debit note number 102. So now it is purchasers return journal book. Okay, the format is date, invoice number, name of the supplier, account to be debited, LF amount. Here invoice number will not be there. Sorry, it will be debit note number. Okay. So see here, 3 shirts at 300 per unit. 3 shirts at 300 per unit is 900 and 1 pant at 700 per unit is 700. Total is 1600 less 10% trade discount. Less 10% on 1600 is 160. So the amount to be taken, net amount to be taken to the purchasers return journal book is 1440. Date is September 10. Debit note number is 102. See here, debit number is 102. Name of the supplier is Ratna Traders. Amount is 1440. Next on September 15th, purchase of goods on credit from Messrs. Zolta Fashions as per invoice number 6781. 10 jackets at 1000 per unit. 10 into 1000 is 10,000. 5 plain shirts at rupees 200 per unit. 5 into 200 is 1000. Gross amount is 11,000. Less trade discount is 15%. On 11,000 it is 1,650. So the net amount to be taken is 9,350. Date is September 15th. Invoice number is 6781. Supplier name is Zolta Fashions and the net amount to be taken is 9,350. Next one is on September 20. Purchase of following goods on credit from Messrs. Bride Palace as per invoice number 1076. So September 20, invoice number 1076. Name of supplier is Bride Palace. Let us see what is the amount. 10 into 2000 is 20,000. On that 5% trade discount is 1000 rupees, which comes to 19,000 rupees. So the amount to be taken to the purchasers journal book is 19,000. Next on September 24, goods returned to Messrs. Bombay Fashion House as per debit note number 103, 2 fancy trousers at 500 per trouser. So in the purchasers return journal book we have to write on September 24, debit note number is 103, supplier name is Bombay Fashion House. 2 fancy trousers at 500 means 2 into 500 is 1000. 4 fancy hat at rupees 100 per unit is 4 into 100, 1400. Total is 1400. Less 5% discount is 70 rupees. 5% on 1400 is 70 rupees. So the net amount to be taken is 1330. So this is what we have taken. The last transaction is September 28. Goods returned to Messrs. Bride Palace as per debit note number 105. So again we have to return only in the purchasers return journal. September 28th, debit note number is our source document. It is 106. Supplier name is Bride Palace. Let us see the amount now. 1 into 2000 is 2000 rupees. On that 5% discount is, trade discount is 100. So the net amount to be taken is 1900. Now let us see the total. So on totaling the amount column of purchases journal book, we get 54,340 as the amount of purchases journal book, and purchases return journal book, if we total the amount we get rupees 4,670. This is the purchase journal book and purchases return journal book which we have completed just now. On September 30, the balance is 54,350 for purchases journal book, and on September 30 the balance is 4,670 for purchases return journal book. Now the second part is to do the ledger posting. In the books of Messrs. High Fashion House, you have to open ledger one by one. Let us see in the purchases journal book what is the first ledger you have to open. Ratna Traders. So we have opened Ratna Traders account. You all know the format of ledger, right? Left side debit, right side credit, CR, and on the DR side, debit side, you will have date, particulars, JF amount. Similarly, on the CR side, credit side, you have date, particulars, JF amount. First, see account to be credited. So, we have to credit by purchases in the Ratna Traders account on September 1, 2017. The total amount of purchases 19,350. Account to be debited. Purchases return journal book. See whether there is any return. Yeah, Ratna Traders, there is a return of 1,440. So September 10, 2017, two purchase return. See account to be debited. So we have to debit purchase return 1,440. Next, Bombay Fashion House. Next account is see Bombay Fashion House is there in the purchase journal book. So write Bombay Fashion House. Account to be credited is September 8, 2017 by purchases 6,650. See whether there is return. Yes, on September 24 there is a return from Bombay Fashion House for 1,330. So account to be debited is purchase return. On September 24, 2017, two purchase return amount is 1,330. Next in the purchase journal book we have Zolta Fashions. So open Zolta Fashions account. Account to be credited. On September 15th is 9,350. So on September 15, on the credit side of the Zolta Fashions, by purchases 9,350. See in the purchases return journal book whether there is any Zolta Fashions. No, there is no Zolta Fashions. So we are not going to write anything on the debit side. We are going to leave it as such. Next account in the purchases journal book is Bride Palace on September 20, 19,000. So on September 20, in the Bride Palace account on the credit side by purchases 19,000. Is there a return in the purchases return journal book? Yes, there is return of 1,900 on September 20. On September 28, 2017, two purchase return 1,900 in the Bride Palace account. This is our purchases journal book. This is our purchase return journal book. We have transferred all the creditors accounts individually. Now what is pending is we have to open purchases account and purchases return account. In the purchases account, total amount of 54,350 will be transferred to the debit side of the purchases account. On September 30, 2017, it will be written as two sundries as per purchases journal. And the total amount is 54,350. The similar way we also did the petty cash book if you remember in the previous video. Petty cash book, the balance was taken to the petty cash account. In that we wrote as two sundries as per petty cash book and we wrote the amount. In the similar way purchases account also written because these are all special journals and the format is the same. I have uploaded videos on cash book, single column, double column, petty cash book, all special journals in the previous videos. You can go through those videos for a better understanding of the special journals. Okay. Now coming to purchases return account, the total balance is 4,670. So this will be transferred to the credit side of the purchases return account. On September 30, 2017, similarly this will also be written as by sundries as per purchases return book 4,670, which is the total amount. If you would like to inquire about the online classes which I take or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.